Hello, everyone, and welcome to Good Morning Trading. I'm glad to see you again. A trader worn out by the high traders. I've just pulled an all-nighter, and it's going to continue. I think I'm heading for 2 sleepless nights in a row. I'm working on a huge project that's in the final stages, so I'm really going to go very quickly and get straight to the point. Yesterday, we had an almost entirely range-bound day. Why? Because we're waiting for the big event of the week, which is happening today, the famous monthly employment report. Originally, we should have had it last Friday, but since the federal administration was on holiday, it was postponed. And so this famous monthly employment report, which is so crucial for the Fed to determine whether it will raise its rates, lower its rates, or keep them unchanged. The report comes out today at 1:30 p.m. GMT, so it's extremely important. 2:30 p.m. for those trading in Europe and France or Spain, for example. So, according to experts, the expectation is for 70,000 job gains last month, compared to 50,000 in December, which means an increase, a boost in the labor market's dynamism, with unemployment expected to remain stable at 4.4%. That's what they think, and depending on the actual results, things could move. So, if yesterday was a slow day, today, starting from 2:30 p.m., it could be a day of high volatility. Interestingly, the White House economic advisor, Kevin Hassett, warned on Monday that job growth could slow down in the coming months. This is due to various factors, including a shrinking workforce in the context of stricter immigration policies. They're starting to have problems in California, for example. In some businesses, they no longer have illegal Mexican workers to provide labor, cheap labor. This is starting to become an issue, and so we have the tightening of immigration policy. And then, in the United States, there is still a much stronger increase in productivity compared to other countries. So the economic advisor of the Magic House, warning employment could be fragile, he warned on Monday, because statistics are coming out on Wednesday. There you go. Be careful. Things might get a bit shaky. We also had a little warning in the United States. It was yesterday. Retail sales unexpectedly stagnated in December, whereas normally December is the time when people max out their credit cards. It's the month when Ken and Barbie go into debt to pay for Christmas gifts. Well, apparently there wasn't any excessive overconsumption. Rest assured, there's still overconsumption compared to the rest of humanity, but it's not excessive. So all of this seems like negative signals. In fact, the White House is saying, be careful, the job market isn't going to create as many jobs. We're not going to create 50,000 to 70,000 jobs every month now. Sorry. Consumption is starting to stagnate a little. There's less momentum. All of this might seem like negative signs that could make the stock market drop. Absolutely not. These are actually very positive signals for a potential rate cut. And there you go. Never forget that bad news brings rates down. And that's generally what Wall Street is waiting for. And especially the NASDAQ stocks, which need to borrow, which need to find funding to finance AI. At the cost of tens or even hundreds of billions per year, I'll let you calculate what a rate drop of 0.25 to 0.50% means on a 100 billion loan. That starts to add up to quite a bit in savings, so let's always be very careful. Stock market bad news in quotation marks. For now, we haven't really had them, but we're starting to get warnings. Consumption is stagnating, unemployment could rise again. These are becoming good news when it comes to the prospect of possible interest rate cuts. I'll move straight to technical analysis. You'll see, it's going to be extremely simple. All the indices are stuck just below a major resistance level. Monthly S1 for the NASDAQ, Dow Jones at monthly R2, and the S&P 500 is blocked by monthly R1. The Dow Jones is also blocked by its middle, monthly R2, and so on. All the indices, whether American or European, are stuck below a major monthly resistance, which prevented us from seeing a big move yesterday. Maybe they're just waiting for that famous employment report, the American one. And depending on that report, either we'll break through all the resistances and there will be relief, or we could see a wave of decline. So be careful. Everything is going to be decided. Today, this is the most important statistic of the week. I'm just showing you this because it's technically beautiful. On Monday, the Dow Jones hit a low at a monthly support and a high at a monthly support. And now we're stuck to the monthly support. We're just waiting now. But for the Dow Jones, still very positive. We're really at the highs, at the highest levels, and it's still above 50,000 points. So a bullish trend is very likely, still strong. If the statistic is guy, and here, as you can see, it's waiting. It's just waiting for the statistic, that's all. So if you're serious traders, you do the same as a professional. You wait for the statistic and you don't take a position beforehand, which, between us, would be pretty stupid when it comes to gold. Gold is also stagnating at a rate. I told you on Monday. We thought there might be a range this week. Monday, Tuesday, Wednesday, bam, a very tight range. And then we have our friend, Bitcoin. This prevented him from staying above 70 miles. He too is blocked by his monthly subscription support. And he takes us down a little slope. At this point, it's around $67,000. Always a very negative scenario for Bitcoin. 2 months of decline, therefore, with the last 15 days showing an acceleration. So that's never a good sign. Be careful. If it breaks below 65,000 points, we could see it drop very quickly to around 62. And let me remind you of the low point. For this year, it's simply $60,105 for Bitcoin. That's it. Listen, I have nothing else to tell you. We're in a waiting period. We're waiting for that famous statistic, and it's going to unlock absolutely everything. In the meantime, this year, they're at or below their resistance levels. Their supports are all monthly, so that shows us things should really move in the coming days, but we're still waiting for that famous statistic. I wish you a great day. See you tomorrow. Ciao, everyone. And in 2 minutes, for those in my school,